Hello everyone, welcome back to the second episode of the Peace and Profits Trading Psychology podcast. Today we will be talking about the fear of missing out. I'm Federico Barletta and I'm with
David Corral.
And let us begin with the podcast. So, David Corral, what is fear of missing out?
Okay, the fear of missing out, basically in short, the FOMO is when a trader has a fear of missing entries. Basically, a trader wants to be in every single move and basically he's not really sticking to its trading plan. If you feel like you have like itchy fingers and you want to do something right away, then maybe you can be in the part of FOMO, the fear of missing out. And I really want to be short with the definition. And I would like to ask you now, Federico, what are the main reasons why traders feel the FOMO, feel the fear of missing out?
I think the main reason is volatility in markets, especially if you think about futures like the Nasdaq, S&P. When you're bullish, for example, and you see that there's a massive move upwards and you see the volatility up and down, then you might have the urge to enter the move even though your setup is not in it. Secondly, the emotions, it's very psychological, emotional, the FOMO, such as greed, fear, excitement, impatience, anxiety. All these emotions that us traders feel every day, they can lead to entering and having the fear of missing out. Thirdly, which is a very big problem that's arising lately, is social trading. Through following Reddit tips, reading a tweet of your mentor, for example, ICT tweeting, he's bullish when we're bearish, then you might, he's bullish, let me buy even though I was bearish at the beginning. And thirdly, signal services. If a trader decides to use signal services, then the moment he or she receives the signal, you will have fear of missing out and entering, even though it might not be optimal. And personally, I don't condone very much signal providers as much. There's a higher likelihood of succeeding if you stick to your own analysis. And David, what do you think are like the main reasons why traders feel FOMO?
Yeah, I would like to add to your last point when it comes to social trading and connecting to others and signal services, something like that. And that's a really crucial point in my opinion. And a lot of traders try to be in the same move as the signal provider, and they don't have really their own opinion. They don't have their own trading plan. And this is more often than not leading into FOMO, or the fear of missing out. Because basically the root cause of this problem is that they don't have really their own edge and they don't trading with their own model. So therefore, of course, you have to trade with your own trading plan. And if you don't have a trading plan, you have a lack of a trading plan, and this is not a solid foundation. So basically this whole entire problem is leading them into FOMO, into fear of missing out. And with that being said, it's really, really important that you have your fixed rules, that you have your fixed way and conditions to operate, and you have to know when you don't act upon in the market, and where you stand sidelines and do nothing and sit still. Also, the FOMO is coming from unrealistic expectations. In a short amount of time, the trader wants to be like, for example, like 10% or 20% up from the beginning. And with that being said, he's like forcing trades to reach the targets too quickly. So you have to slow down, and you have to really try to focus on your setup, and don't try to rush through the process. Don't try to get too quick to your targets. And especially when it comes to challenges like for the proprietary firms, a lot of traders in the early stages of the proprietary firms having the time limits on those challenges, me personally as well. And in the beginning, this was really hard, because in my mind I was thinking, okay, I have, for example, for phase 1, I have like 30 days time limitation, And this puts a lot of stress on myself because I know, okay, I have like this fixed amount of time, and during this time I have to pass my challenge. And with a lot of prop firms, like most of them are right now without a time limitation, and that's a really positive aspect of trading. And that's another reason that you don't have to fear the FOMO, and you don't have to fear missing a move, because really you have like an unlimited time horizon, and you can really be patient waiting for the setup. Yeah, that's my opinion, and those are my main reasons.
And to add quickly for like the benchmark of like the targets of initial traders trying to get a lot of return quickly, just for reference, the best traders in the world in Wall Street, in big banks, if you do above 20% a year, above 25% in a year, that's exceptional return. Therefore, when you see like traders online is saying, oh, you need to make a 10% in a trade, 20, 30, 40% in a month, you might have 1 month like that, but then the next 2 or 3 months, they will probably end up losing it all as they over leverage, don't have a fixed risk management plan, and are most likely over leveraging. So even a 2% return per year, 2 to 3% return per month is still a very good result in the long term.
Yeah, that's a really good point. Thank you very much, Federico.
Yeah. And another question, David. Throughout your years of trading, what have your experiences been with fear of missing out?
Yeah, that's a really good question. And for me personally, I learned a lot that less is more. And trying to be really nimble and really picky in the charts, and really not try to force any setup. And that helped me a lot facing the FOMO, facing the fear of missing out. And also it goes hand in hand with over trading. And I have a fixed rule for myself. Basically what I'm trying to do, I'm doing it. I'm setting a maximum of 2 trades per day for me personally. So after my second trade has been executed, there will no other trade being executed on that day. And I close the computer and leave the office.
Yeah, sounds good. Thanks for sharing.
And Federico, I would like to know what your experience have been with the fear of missing out.
Probably when I reflect back on the years of trading, the events where I felt the most emotions of missing a move was when I used to trade news events like CPI, FOMC, NFP, where there's like this massive influx on volatility at that specific time. And I used to trade it with like buy stop, sell stops, or buy limit, sell limit. And this slippage in those events led to some of the biggest losses in my trading experiences. And through seeing these massive moves in volatility, I really became like fearful of missing all the money, because I started calculating like it moved 40 handles above. Even with one micro contract, I could have made so much money. Okay, maybe it's going to go another 20, but then if it goes back another 30, it's very difficult to manage risk in those events. And that wild movement is where I had the most fear missing out. And the easiest solution I have, I don't trade news events. And if there's a news, I wait at least 3 to 5 minutes and I relax. And on this note, we've already introduced what is FOMO, the main reasons why traders fall into FOMO, and our experiences with FOMO. And we would like to lead the podcast into the reflection time of 2 minutes 30, where now it's your turn to reflect on what has your experience been with FOMO, what were the main causes, and what have you done or are doing to solve this problem. And then after the 2.5 minute reflection time, both David and I will reflect and tell you how we solved or are solving FOMO.
Okay, welcome back, guys. I hope you enjoyed the reflection time and found some really great insights about yourself. And now we are coming to the most important question, Federico. I would like to ask you now, how have we solved the FOMO, the fear of missing out?
The first way I solved it is to come up with the acceptance that price can reach my daily target without giving a high probability entry. Throughout the years, I've developed a very clear market conditions of when to enter and which entry criteria needs to happen before I enter. Therefore, even if the price target is extremely clear, but price just moves as a straight line without ever retracing to any premium levels for a short, then I cannot enter based on my model. And therefore, it will need to lead to the acceptance of, okay, price reached my target. I'm happy that I predicted a daily bias, but I still didn't lose money or make money, so that's okay. And through that acceptance and having a fixed trading plan on entry criteria and market conditions when to operate, it helped a lot to solving the fear of missing out problem. And what about you, David? How have you solved FOMO?
Yeah, personally, for me, my problem was FOMO, the fear of missing out, at the beginning stages of my trading career. It was one of the biggest problems I have to face, and I have to find some way to solve it. And what I did was I created my unique trading plan, and I'm trying to follow my trading plan with discipline and trying to be really professional at it. So therefore, this keeps me from fearing missing a move, because I know that my trading plan is allowing me to enter multiple times a day, and my model is speaking also multiple times a day to me. So therefore, I have really no rush finding a setup and trying to think in my head, okay, this setup here is only there once, and with my trading plan, I know now that the setup repeats over time, and I don't have to face the problem of fear of missing out anymore. And also, when it comes to my challenge accounts with my proprietary firms, I know that I don't have a fixed amount of time in the first phase and also in the second phase, and that's another reason for me to be really patient, waiting for my setup, and not trying to force any setups and staying away basically from the FOMO.
Very good solutions. Thanks for sharing.
Yes, of course. And there's one thing I want to remember you guys. When in doubt, wait it out. And on that peaceful note, I would like to end the podcast here. And as always, if you like the podcast, leave a comment below, subscribe, give a thumbs up to the channel. And we will be back bi-weekly with the third podcast. And again, thank you very much to you, Federico, and your great insights.
It's been a pleasure.
You can leave it if you have a final note for the crowd.
Thanks for watching until here, and see you next time. Bye-bye.